The convergence of monetary policy, gold reserves, and digital asset infrastructure. 1. U.S. bond market instability and declining dollar strength. Long-term U.S. Treasury yields are approaching 15-year highs, reflecting a persistent rise in inflation expectations. Simultaneously, the U.S. dollar index, DXY, is down over 10% year-to-date, signaling weakening global demand for the dollar. The Federal Reserve's forward guidance on rate cuts threatens to further reduce short-term yields, worsening the outlook for dollar-denominated debt. This dynamic is creating downward pressure on dollar credibility and sovereign debt appeal at the international level. Footnote: U.S. long-term bond yields are rising while the dollar weakens, driven by inflation concerns and anticipated Fed policy shifts. 2. Coordinated federal mobilization on digital assets. Multiple U.S. executive agencies, including Treasury and Commerce, are active members of the President's Working Group on Financial Markets with a specialized focus on digital assets. Agencies such as the SEC and CFTC are accelerating rulemaking processes to clarify the legal framework for cryptocurrencies. This coordinated interagency engagement indicates high-level strategic importance being placed on digital asset infrastructure. The urgency of this alignment suggests a systemic monetary pivot may be underway. Footnote: the federal government has mobilized its key financial regulators to structure a comprehensive framework for cryptocurrency markets. 3. Strategic use of stablecoins to preserve dollar hegemony. The U.S. has introduced initiatives, including the Genie-US Act, to increase demand for short-term Treasury securities by embedding them in stablecoin frameworks. These instruments would allow private sector stablecoin issuers to hold T-bills as collateral, exporting U.S. debt globally and reinforcing dollar dominance in digital settlements. This model positions stablecoins as a monetary tool for international policy and financial diplomacy. Footnote: stablecoins collateralized by U.S. Treasuries serve as instruments to reinforce dollar-based monetary policy globally. 4. BRICS coalition and the prospect of a gold-backed currency. The BRICS bloc has collectively amassed over 5,700 tons of gold, equating to approximately 16% of global reserves. Member states have openly discussed creating a cross-border settlement currency backed by gold, designed to circumvent U.S. sanctions and the dollar-dominated SWIFT system. This represents a direct challenge to U.S. monetary supremacy, particularly in emerging markets and resource trade. Footnote: BRICS nations are developing gold-backed alternatives to undermine U.S. dollar centrality in global trade. 5. Emerging concepts of Bitcoin-linked Treasury securities. Proposals such as Bit bonds, supported by the Bitcoin Policy Institute, suggest issuing Treasury instruments partially backed by Bitcoin, potentially 10% of raised funds allocated to BTC. This aligns with budget-neutral strategies to build sovereign crypto reserves. Additionally, former President Donald Trump has signed an executive order evaluating a U.S. strategic Bitcoin reserve, which would further entrench Bitcoin as a monetary hedge. Footnote: new financial instruments like Bit bonds signal consideration of Bitcoin as a partial reserve asset within U.S. debt issuance. 6. Gold revaluation and Fed leadership opportunities. Legal precedent exists allowing the U.S. government to revalue its gold holdings, currently accounted at $42.22 per ounce, providing a means to bolster balance sheet strength. In 2026, a new Federal Reserve chair may be appointed. Trump's prior nominee, Judy Shelton, is known for her advocacy of a gold-linked currency model. The potential reintroduction of a gold standard in any form could fundamentally realign U.S. monetary policy. Footnote: legal and leadership pathways exist for the revaluation of gold or the reintroduction of gold-backed U.S. financial instruments. 7. Ripple, Rosie Rios, and XRP's infrastructure role. Rosie Rios, former Treasurer of the United States and signatory on U.S. currency, now serves on Ripple's board. Ripple promotes the XRP ledger as a neutral settlement layer for tokenized national currencies and commodities. This architecture enables multi-asset settlements while bypassing traditional intermediaries like SWIFT. Ripple's role in digitizing finance is underscored by its deep ties to U.S. public institutions and former officials. Footnote: Ripple's network is positioned to serve as a neutral bridge for tokenized sovereign assets with institutional endorsement. 8. Symbolism and timing of America 250 and digital monetary reform. Rosie Rios is also chairing the America 250 Commission, responsible for organizing the United States' 250th anniversary in 2026. Reports suggest this milestone could coincide with the unveiling of a new type of treasury bond or monetary instrument. Such timing could parallel major structural announcements regarding blockchain integration or a gold/BTC-backed financial framework. Footnote: America's 250th anniversary in 2026 may serve as the stage for unveiling a transformed U.S. financial instrument or system. 9. Global institutional support for digital transition. Leaders such as Christine Lagarde have championed digital currency transformation. As head of the European Central Bank, she advocates for a digital euro and acknowledges the growing threat posed by digital payment platforms and crypto-native entities. Central banks worldwide, including those in China, India, and Africa, are deploying digital payment systems to expand financial control and efficiency. The infrastructure for post-cash economies is already in place. Footnote: Central banks globally are accelerating digital currency adoption, reshaping the framework of national monetary sovereignty. 10. Synchronized global movement toward monetary convergence. The alignment of gold accumulation, blockchain infrastructure development, and digital identity legislation signals a coordinated global pivot. The United States, while facing competition from BRICS alternatives, appears to be exploring hybrid models that preserve strategic control, combining elements of gold, Bitcoin, and centralized digital ledgers. Regardless of which digital asset prevails, the trajectory is clear: programmable, traceable, and digitally governed finance will dominate the coming era. Footnote: A synchronized convergence of gold reserves, blockchain, and digital regulation indicates systemic transition to programmable monetary architecture,